Welcome everyone to today's Training Without Travel webinars for auditors presented jointly by AuditNet and Boundless LLC. This webinar is part of the Training Without Travel series covering internal audit. Special topics. I'm Jim Kaplan, founder and owner of AuditNet, and I will be moderating the webinar. Joining us is Michael Brosetti, president of Boundless LLC. This one-hour webinar will be covering, as I mentioned, the business of fraud and occupational abuse. And before I have Mike introduce himself, let me cover some of the housekeeping items that we have for today's webinar. This webinar and its material are the property of AuditNet and its webinar partners. Unauthorized usage or recording of the webinar or any of its material is strictly forbidden. We are recording the webinar, and if you paid the registration fee, you will be provided access to that recording within 5 business days after the webinar. Downloading or otherwise duplicating the webinar recording is expressly prohibited. We kindly request that everyone fill out the brief online evaluation questions that you'll see at the conclusion of the webinar. Your feedback is very valuable, so please take a minute or two to complete the survey. In addition, because this webinar qualifies for NASBA CPE credits, we will be putting up polling questions in compliance with NASBA standards. Those answering the questions will receive their CPE certificate by email within 7 to 10 business days. You will have an opportunity both during and at the end of the webinar to ask questions. Submit your questions during the presentation via the chat window at the lower right-hand box on your screen. Type your question and press return to send it. Any question we're unable to answer by the end of the webinar will be answered via email directly within 48 hours. As moderator, I will be monitoring those questions and also help with launching the polls. We also want to remind you that if GoToWebinar stops working, you may need to close it and restart it. However, you can always dial in and listen and follow along with the handouts that you received. So at this point, I'd like to turn the floor over to Mike and let him introduce himself and give you a brief overview of his background and introduce the agenda for today's webinar. Mike?
Thanks, Jim, and welcome everyone to our webinar series. This is our second in a series of 8 Training Without Travel webinars for auditors, and today's topic is, of course, fraud and occupational abuse. It can a interesting, and I'm reluctant to use the word exciting topic, but nonetheless a topic that is always interesting for discussion of internal auditors, and certainly a topic that really has plagued organizations, both public and private, for a very long time. My name, again, is Mike Brosetti, and I've come from both the external audit and the internal audit worlds. Started a consulting practice in 2005, really where I focus on helping organizations develop and build and enhance their internal audit functions through both training and consulting activities. I'm very passionate about writing as well as speaking, and really had a great opportunity in both my external audit career as well as my internal audit career working in a Fortune 500 public company to really see the crux and the mechanics of internal audit functions and how these topics such as fraud really can affect an organization. I've been involved in fraud investigations, conducting the investigations, supporting the investigations, and certainly I think until you've gone through it, it's a topic that I think as internal auditors we are reluctant to accept in terms of these things can really happen to us. So hopefully out of today's session, and I know we have a limited time of about an hour, but we're really going to focus on helping educate and increase the awareness of fraud and the role internal auditors can play with respect to this topic. A small disclaimer here, all the opinions expressed herein are solely those of Boundless. I do wear multiple hats, working in partnership with AuditNet, as well as working and volunteering with the Institute of Internal Auditors, but the opinions expressed herein are solely mine, and I will take full responsibility for them. Let's take a quick look at our agenda for today, highlighting some of our key learning objectives. First is to really understand what is fraud and fraud risk, and what role the internal auditor plays with respect to fraud and fraud risk. Again, this is an emerging topic area for internal auditors, and the reality is the nature of internal audit's work is really provides it really provides a gateway, if you will, to identifying and really seeing where there is fraud and the risk of fraud in our organizations, because frankly we're on the front lines. We're going to examine and take a look at some of the common schemes and the scams and shams, categorically what is out there. And as we go through this section of the webinar, really look at your own organization and see what may or may not be applicable to you in terms of some of these common schemes. And lastly, we're going to learn 7 techniques to safeguard against fraud and occupational abuse. Whether you're in the process of designing, implementing, or assessing, no matter where your organization is, these 7 techniques are going to be things that can be put in your auditor's toolkit and help to benchmark and to, again, either design, implement, and or assess the current practices within your organization. So really good, tangible takeaway value is how this webinar has been designed. And another look at some of the topics we'll cover, again, types of fraud, examples of fraud schemes, taking a look at some of the behavioral red flags. So taking a look and really taking a dive into that behavioral, that human element of what makes a fraudster tick. We've all heard the stories. Bernie Madoff, you know, a charismatic community leader, but in the end was a big fraud. What are these behavioral red flags? How can we be more in tune to detecting them? We're going to talk about that in today's webinar. We're going to talk about fraud risk assessment and the internal auditor's role with respect to fraud risk assessment. We're going to take a reference at some of the Institute of Internal Auditor standards where we can get guidance on how to take into account fraud risk as part of our normal everyday audit practices, and what our obligation is from a standards perspective or a best practice standards perspective, referencing some of those key standards. And of course the idea of implementing safeguards to combat fraud. And again, these 7 safeguards that we're going to cover really I think will be beneficial no matter where you are in your process, whether you're looking to design, whether you're looking to implement or even assess existing structures and practices that are currently in place within your organization. Wanted to start off with the definition of what is fraud, and here's one of my favorite definitions for fraud, and this is actually a project, and it was published in a guide called Managing the Business Risk of Fraud, a practical guide, and this was a joint publication put together by the AICPA, the Association of Certified Fraud Examiners, and the IIA, 3 well-respected, well-known organizations. And it's a brief, it's a short definition, and what I particularly like about this is it defines fraud as any intentional act or omission designed to deceive others. And when we talk about fraud, one of the key words here is deception. And it's an intentional act or sometimes an intentional omission. So knowingly and intentionally leaving something out for the purpose of deceiving others. Not every fraud is necessarily illegal, but typically frauds will have some form of detriment to the organization and or the organization's stakeholders. This definition goes on to say resulting in the victim suffering a loss, and that's really a key attribute of what constitutes a fraud. Well, it's deception, and it also needs to have a victim, someone who suffers some type of loss, or the perpetrator who is achieving a ill-gotten gain, so to speak. So a brief, short definition of fraud. Again, a combination of leadership here from the AICPA, ACFE, and the IIA that really talks about what fraud is. And again, not every fraud is necessarily illegal. Many of them are, but it's that intentional deception. And that's why I like the definition, because sometimes we see wrongdoing in our organizations, and a lot of times they might not be recognized as being illegal, that doesn't make them right. They're still wrong. They're in violation a lot of times of the ethics codes or the business conduct policies of an organization. So a very broad and encompassing definition we see here. Simply stated, again, the attempt to deceive for personal benefit. So deception is really key in fraud. Sometimes we'll also hear the term occupational abuse, and I wanted to define this. And when we think of occupational abuse, this is the notion when an employee abuses trust placed in him or her by their employer for personal gain. And we'll talk about a number of ways in which employees can abuse that trust. Things as simple as recording additional miles that are traveled for an expense reimbursement. Your employer is going to place a reasonable amount of trust that you're going to honestly and accurately complete such reports. But if someone's padding their expense report with additional miles, might not seem like a lot of money per se, but there are opportunities of abuse. Also want to take a look at the two primary categories of fraud before we get into a little bit of a more detailed discussion about the categories of fraud. But primarily, frauds can either be perpetrated against an organization or perpetrated on behalf of the organization. Now, when you're talking about frauds that are perpetrated on behalf of the organization, what you're really talking about are typically where more senior level folks are involved in the fraud. They're purporting the organization itself to be, for example, maybe more profitable than it actually is. When you think of the Enron type cases of the world, the Lehman Brothers type cases, you have all of these instances where the organization itself was perpetrating the fraud, and it was orchestrated by the most senior level executives, the officers of the organization that effectively controlled the decisions of the organization. On the other hand, when you're perpetrating against the organization, these more typically and more commonly are referred to the types of frauds that are a detriment to the organization. So stealing inventory from the organization, stealing cash, those types of things are perpetrated against the organization rather than being perpetrated on behalf of the organization. Typically, again, you see the higher level officers typically involved when you have these fraud categories of being perpetrated on behalf of the organization. And frankly, these are the frauds that are going to be a lot tougher to detect and handle, if you will, because again, they typically are involving the highest levels of management, including the officers typically in these types of cases. Wanted to take a look at fraud risk. Now, internal auditors have the responsibility for considering fraud risk in their engagement planning. Fraud risk, simply defined, is the potential for the occurrence of fraud and how the organization manages fraud risk, what it's doing. Internal auditors have an obligation to consider and assess fraud risk. They're not expected to have the same level of competency as, for example, a certified fraud examiner or somebody who solely focuses on providing or conducting fraud investigations, but they have to be fraud aware. They have to have an understanding of fraud risk, and again, how the organization is managing fraud risk as a overall enterprise. Terms that should not be too unfamiliar to internal auditors. How do you measure risk? Well, you do it through likelihood, and you do it through impact. So as you're going through fraud risk, you're going to take into account, well, what type of impact can these particular types of frauds have on our organization? Are they possible? What impact could they have? And then how likely are they? When we think of likelihood, and I know for some of the more seasoned practitioners that have joined our webinar, you want to be careful when you're assessing that likelihood and make sure that you segregate out the inherent risk and the residual risk of fraud in this context. Saying, well, based on your industry, you're going to be inherently more exposed to certain types of frauds. And a lot of times we like to say, well, we already have controls in place, so we're not susceptible to fraud. But you really want to take into account, based on your industry, your operations, in the absence of controls, what is the inherent risk of these different types of frauds? And when you identify those, now you can start mapping to, do we have the right controls in place, and have we mitigated, have we taken reduction measures, so to speak, to reach a acceptable level of risk? And that would be what we would consider or constitute as our residual risk. So the same fundamental risk management concepts apply when we're talking about risk. So keep that in mind as we go through today's webinar. Some fun fraud facts here. The typical organization will lose about 5% of its annual revenues to occupational fraud. All of these are coming from the source of the ACFE, the Association of Certified Fraud Examiners. I think they do it every 2 years, so it's a every 2-year report to the nations on occupational fraud and abuse. This is a large number. I mean, if you take 5% of your annual revenue and see this as a typical loss number, that would indicate to us that there's a big chunk of potential money out there that we're losing that we can essentially recapture. The tougher question to, I think, answer is, well, how much fraud do we have as an organization, and how are we going to find it? And after this webinar, hopefully you'll have some good techniques on how to do that. Just because it doesn't happen doesn't mean you have great controls. To the contrary, if you haven't identified, a certain percent of fraud in your organization and the history of it, I would challenge that and say, well, maybe we're not looking hard enough. If you're looking really hard and you're doing a lot of the safeguards that we'll talk about, and you still have a pretty low number, that's great. You're getting some positive assurance there that your techniques are working. But these are statistics that are published by the ACFE, and take it for what they're worth. I'm really trying to get these numbers and have 100% certainty, as you know, is certainly not feasible. There's so much uncovered or undiscovered fraud that could potentially affect these numbers. But nonetheless, this is a credible survey based on a respondent group of both public and private companies. And this report in 2012 identified the median loss on a per-case basis for organizations less than 100 employees at $157,000 per case. Organizations in the larger employee size was close to this number. I don't recall exactly, but it was, I believe it was within like a $10,000 or $15,000 swing at a per case level. Median loss information by employee type reveals some interesting results. When you have the lowest level of regular employee involved in the fraud, the median loss is lowest at $60,000. To the contrary, when cases involved a top-level executive, you see the median loss substantially increases, and on average was $573,000. Excuse me, the median number, not the average here. Based on the employee type when the case involved a top-level executive. And you see the manager level really being really being somewhere in between here at 180,000. My experience is that, and I think natural intuition tells you this, is you know, if a senior level executive is going to be getting involved in some type of fraud, you know, these folks are typically, you know, probably at a salary level that's pretty substantial. So I don't know if you're going to see them as inclined to take small amounts of money when you relatively compare it to their salary. There was I'm in Philadelphia, and there was a local hospital that had a top executive alleged, there was an allegation of a top executive committing fraud. It was actually the chief general counsel. And the way the fraud was uncovered was the general counsel had a entity set up, and payments were getting made to that entity without rendering any services. Ironically, what detected the fraud was there was a duplicate, an accidental duplicate payment made to this company that was owned by the general counsel. And the long story short is it was traced back to the general counsel. It was set up as a fictitious company. What I found pretty astonishing is over an 8-year period, the general counsel had stolen about $300,000. This was a man who was making close to $400,000 a year in his salary, and it just boggled my mind that over an 8-year period he was stealing what was effectively what I would consider a small percent of his salary, but nonetheless, where there's opportunity, there's the inkling of fraud, which we found in this case, and we'll talk about that fraud triangle coming up soon in today's webinar. Next, we're going to take a look at some of the common types of fraud schemes. This is where I like to ask people that are participating in these webinars is, and there's about 10 common types of fraud schemes. When you think of your industry, when you think of your organization, these may or may not apply. So from an inherent risk perspective, I'd encourage you as we go through these, just think and sort of notate, do we have an inherent risk or an inherent exposure to any one of these types of frauds? Asset misappropriation can include everything from cash to inventory to equipment, anything that has value, right? An asset is anything that has value to the organization. Skimming occurs when cash is stolen before it's recorded on the books. This word always makes me think of the HBO series, The Sopranos, where they talk about their ill-gotten business operations, and they talk about how much percent of the skim they divide up amongst each other in their business. So this is where the cash is never recorded. It's taken right off of the top. Harder to identify, harder to detect unless you have a good sense of what revenues should be based on inventory sold. That is the notion and the type of fraud that we would call skimming. When we're talking about disbursement frauds, this is any type of payment for either fictitious goods or services. It could involve inflated invoices or invoices that are covering personal purchases. The example that I shared with the general counsel at this local hospital, I think certainly would fit into the disbursement fraud category. Another common type of fraud scheme would be payroll fraud. Anytime you're paying falsified overtime or maybe even a ghost employee, that would constitute payroll fraud. A good way to detect payroll fraud is typically if you have a ghost employee that's established in your payroll system, what you will typically see is that employee is not going to be established, not going to be configured and set up for tax withholdings. It's a good way to get a flag for payroll fraud. So people that, people that are participating in payroll fraud and they're setting up ghost employees, the last thing they want to do, I think the last thing they're inclined to do is start taking a chunk of their money and sending it off to the federal and state authorities for tax purposes. So that's a good flag to look at when you're talking about payroll fraud. Before we get into some of our other common fraud types, we're going to take a brief pause and we're going to launch a polling question. And the question is, survey statistics have shown that the median losses are higher for frauds committed by whom? So take a minute and see if you can get this answer, and then we'll debrief with the answer. We have everyone voted, and everyone got it right. Senior executives, absolutely right. The 2012 report to the nations on occupational fraud and abuse reveals that the median loss to fraud perpetrated by top executives is $573,000, and this is the highest amount when compared to regular employees and management. Great, good job. One of the things that I started thinking about when I was developing this polling question was, well, do board members ever commit fraud? And one of the, I think, natural safeguards that you have, and you want to be careful where senior executives also have a board seat. You see this a lot in privately held organizations where senior executives are also board members. The key distinguishment and difference is a true board member serving the role of an independent director purely has an oversight role. They do not have access to operational data or systems. They're not charged with management of the organization. So you typically, won't see fraud being perpetrated by folks that essentially don't have that managerial authority. Senior executives are, again, top-level managers. They have the day-to-day responsibilities. They understand the business. They're solely focused on the operations. They have a lot of influence and control, et cetera, which is why we see them, that group, as such a high median loss. So good. Glad to see everyone nailed that one. Expense fraud, I talked about this a little earlier, but, submitting things that are non-existent and or not business-related would constitute expense fraud. I've seen this done where it comes to travel miles, meals. Some organizations use per diem rather than looking to collect receipts. That way, it's just a fixed amount. One way to safeguard against expense fraud. I want to say this is probably more common than we think. I worked with one organization that had a really interesting expense fraud process where they get all their transactional data from American Express, and there were certain prohibited places and stores, venues that they could purchase from. And one of the things where they found a lot of wasteful spending was they had in the local area, and this was in New York, they had identified all of the local, quote, gentlemen's clubs, and it was strictly prohibited per company policy to take any clients to these places. And what they were able to do with the American Express data is compare it against some of the receipts that would get billed to these prohibited places, and they were able to identify and capture expense fraud for these, quote, non-business related expenditures that were getting pushed through the company's expense process. And the organization was large enough where there was a significant tens of thousands of dollars that were uncovered during a short period by taking these analytical procedures. I found that a lot of expense frauds can implement, or expense fraud detection mechanisms can implement those types of analytical procedures to really detect and deter these types of fraud schemes. When we talk about financial statement frauds, again, this is one of those categories where you're probably perpetrating the fraud on behalf of the organization. since the financial statements are essentially a reflection of the financial well-being of the organization. And this is where we're overstating assets or revenues and or understating liabilities and expenses. Those are, at a high level, the only two things you can do to make your organization look better than it actually is, either overstate asset or revenue or understate liabilities and expenditures. Another category is information misrepresentation. An example of this could be where you falsify information in your used as performance measures. Some banks, if they lend money to organizations, will have what is called restrictive covenants. These are provisions in the contract that might require the organization to maintain certain financial ratios and or performance measures. So misrepresenting what those measures actually are would also constitute a type of fraud. And corruption is really a pervasive fraud. It's misuse of entrusted power for private gain. I think a very broad and encompassing concept here when we talk about corruption. There's a lot of laws that are intended to prevent corruption, such as the Foreign Corrupt Practices Act in the United States, as well as the UK Bribery Act, which is also intended to combat corruption, but nonetheless a common type or category of fraud scheme that we'll include here. Bribery, we define that as the offering, giving, receiving, or soliciting of anything of value to influence an outcome. Again, a lot of the FCPA, UK Bribery Act, when we talk about corruption, bribery is sort of a conduit to that a lot of times. Something to keep in mind. Information misuse is really using confidential and proprietary information to wrongly benefit someone. This can include things like customer lists, secret proprietary recipes, methods or procedures, things that might be patented, anything that is, again, confidential or proprietary. I don't know if many of you remember when, I can't remember if it was Coke or Pepsi, but one of the big, an administrative assistant that worked at, I want to say it was Coke, was trying to flog their secret Coke recipe to Pepsi, and Pepsi, when they learned of this, they actually called the authorities. They contacted Coke, and they set up a sting operation, and they caught the people that were trying to sell this information. Good example of information misuse, nonetheless. And lastly, tax evasion. The intentional reporting of false information to reduce tax liability, certainly another common type of fraud scheme that you want to keep in mind. So hopefully you had, just going through some of those common types, for your own organization, thinking through what are some of the ones that might be applicable to you, depending on your industry and depending on your organization. The next topic area we're going to get into is looking at the fraud triangle. Hopefully most of you have heard about this. Motive, opportunity, and rationalization. These are the three legs of the stool, so to speak, three sides of the triangle that are most often present in any type of fraud. And we're going to examine each of these three in a little bit more detail. But before we do that, we're going to take our polling question number 2. And this is going to test your knowledge on the fraud categories we just went over. And this question is going to ask, the fraud of overstating assets or revenues or understating liabilities and expenses is best described as which type of fraud? So take a minute and answer that, and then we'll debrief with the correct answer. Looks like everyone voted, and you nailed it. Financial statement fraud, absolutely right. Again, the only two things you can really do is overstate assets or revenues or understate liabilities and expenses. And the intent of that fraud is to misrepresent the actual health and vitality of the financial well-being of the organization. So great. Nice job. Let's start off with motive when we talk about the fraud triangle. This is the, quote, need that the person committing the fraud satisfies. And typically, it's usually represented by either pressure or incentive. When we talk about motives that are originating from pressure, this could result from having some type of need or problem. Sometimes they might be influenced from their superiors, getting pressure from management to fudge the numbers, to do something that maybe the employee is not so comfortable doing. Maybe it's to meet external expectations. These types of pressures can oftentimes serve as that motive for the fraud. Incentive, on the other hand, is a personal benefit. The employee might be in a position where they know if they fudge the numbers, they're going to get a bonus, or they're going to get higher compensation. I think we saw the motive through the mortgage crisis. A lot of mortgage brokers, for example, were very incentivized to make loans. And the fact that a lot of these loan criteria had very low, sometimes no documentation requirements, these incentives really gave them the motive to lead people and guide people into loans that, one, they necessarily didn't necessarily have the capability to afford, and two, sometimes even incentivized and provided motive to get people to misrepresent and misstate what their earning and their incomes were to make these numbers. So incentive could be a powerful motive. Maintaining lavish lifestyles as well as satisfying someone's greed all fit into the motive category. And again, the concept of that fraud triangle is motive, rationalization, and opportunity all have to be there in order to have a fraud present. Rationalization is a very powerful concept. You know, and you'll see some of the examples here, but this is how a person justifies their actions. They rationalize it away. They justify it. Whether it's right or it's wrong, the power of rationalization can convince even the most honest people that what they're doing is justified. So that, keep that in mind, is a powerful element of the fraud triangle. And lastly, there has to be the opportunity. Without the opportunity, there's not going to be the ability to commit fraud. And where can the opportunities lie? Well, in weak internal control structures. Sometimes poor management of an organization lends itself to having the opportunity to conduct fraud. Lack of board oversight, not having segregation of duties in place, abusing authority or overriding controls. You know, this is such an important concept as an internal auditor. We need to always take into account and take a look at what controls are being overridden. Internal controls are put into place for a reason. Anytime there's an override, we should always understand what was the circumstance, why was this necessary, and really reassess as to, do we have the right internal controls in place if in fact they need to be overridden. So taking a look at those, nonetheless, this is what provides, oftentimes provides opportunity for frauds. The other thing is knowledge, knowing what auditors look for. For those of you that might be familiar with the Health South fraud with Richard Shkrusky, this was perpetrated, I want to say, probably in the late 80s, maybe early 90s, but the way that this large organization was able to conduct such a perpetual long-term fraud was they knew their external auditors would look at only transactions over $5,000. So the way they were balancing and manipulating the financial statements was with transactions under $5,000. That was the opportunity where fraud could be committed. Again, rationalization, opportunity, and motive. 3 essential elements that need to be incorporated into any type of fraud. As you know, fraud is very related to the perpetrator, behavioral red flags, things that we want to be alert to as internal auditors. Now, keep in mind, these might suggest they're not proof of fraud present, but some of the things that you see here listed are certainly flags that we want to keep in the back of our head as internal auditors. All of these things I found, and even in some of my own investigations, is when you get to the point of questioning people that typically have a high level of authority, and they just demonstrate this higher, this attitude of who are you to question me, and they flare their arrogance of you're wasting their time, and just a flag that shouldn't go unheeded. In my experience is when you encounter this, more times than not, you're going to find that this person demonstrating these odd characteristics are in fact involved in wrongdoing. Other things like addictions, this idea of secrecy, all things that could be should make us more alert, or at least again log that flag in our head as to maybe being a potential area for fraud. This is one I think as internal auditors we can very much be in tune with, is when you're getting a vagueness in explaining the business, intentionally misleading sometimes. When you ask a question, you find that the responses are off mark, they're not very relevant, they're intended to distract. All things that might be that behavior red flag that you want to be careful of. Polling question number 3, we're going to ask which of the following elements are not part of the commonly known fraud triangle. So I'm going to close the previous poll. I'm going to launch this poll now, and let's see how the group fares. The poll is now open. Looks like we got about 86% of the vote in. We'll wait just another minute here, see if we can get 100%. Got about 20 seconds left. And I'm going to close the poll in just about 10 seconds. Looks like we have the majority of respondents coming in with arrogance. Good. Yeah. Opportunity, motive, rationalization. The way I always like to remember this is if you want to prevent more fraud, M-O-R, you want to remember the fraud triangle. So if you want to prevent more fraud, M-O-R, you want to remember the fraud triangle. That's just my little mnemonic device to remember the 3 sides of the triangle. Good. Fraud risk assessment. From an internal auditor's point of view, at a high level, the fundamental process, and hopefully you went through this as we went through some of the types of frauds, is first determine what types of fraud have some chance of occurring within your organization. And don't be naive about this exercise. Again, you want to assess the inherent exposure or the inherent risk. So it's not that just because you say corruption can happen here or financial statement fraud can happen here is because you have bad people. You want to talk in terms of factual matters. The reality is you issue financial statements. You're an entity that has public shareholders. Yes, financial statement fraud does have a chance of happening. Before you get into the discussion about the trust and the integrity of the people in your organization, find out what types of frauds have a chance of happening. Then you want to get into understanding the inherent risk of these. Some of the things to consider is the availability of liquid and saleable assets. Take into account the culture of the organization, morale and employee turnover. the history of fraud and losses in the organization. And again, having a history of fraud as well as not having a history of fraud or having the belief that fraud has never occurred could be two sides of the spectrum that might warrant a careful consideration of, do we really have the right fraud risk assessments and right fraud controls in place. And other specific business area indicators, depending on the business cycle that you might be reviewing, there are specific indicators. We're not going to get into too much detail about that as part of this webinar because we do only have an hour. But you'll want to take these core things into consideration when you're assessing that inherent risk. Taking a look at the current anti-fraud programs that you might have in place, taking a look at potential gaps as well in your organization's controls. Segregation of duties is very much a key safeguard when you're looking to prevent and deter fraud. So keep that in mind as you go through your fraud risk assessment. Where you know segregation of duties does not exist, you have to realize that there is a higher fraud risk in that particular area. Likelihood and significance for fraud occurring. Nobody likes to admit they have fraud. Nobody likes to admit that it could be likely. But the reality is, and whether you're a for-profit, non-profit, whether you call it profit or surplus, where there's money, there's a temptation for fraud. So be honest in your assessment. Consider the likelihood of fraud occurring. And the other thing is the business impact and significance of fraud. So again, that likelihood and impact assessment that most internal auditors are pretty familiar with, you want to put it in the context of the fraud risks that are related and relevant to your organization. Our next section is we're going to go through 7 safeguards to combat fraud. Again, whether you're at a stage where you're participating in helping management design, implement, and or assess, these are really 7 core things that organizations should be doing. Hopefully they'll give you some good tangible takeaways from today's webinar. And as you see here, it spells out auditor. You know, I think everyone, whether you're a manager or in fact an internal auditor, we're all a little bit of an auditor at heart. And I like to tell managers and directors of boards, I say, if you can't audit something, how do you really, I ask the question, can you really manage and govern it? And when you ask that and challenge people with that question, they generally come back and say, no, if you don't have that transparency and you can't audit it, you're right, it really is hard to govern and manage it. So I always like to say we're all auditors at heart. Let's get into talking about some of these safeguards. And again, from the perspective of whether you're designing, implementing, or assessing, you know, the tone at the top, as we call it, a word that we're hopefully probably familiar with. You really need to affirm values. How's it getting done in your organization? Is it getting done? Do we need to do more of it? And really what I think is key about tone at the top, I know it's a word that we hear a lot, but the bottom line is you got to say what you mean. You got to mean what you say, and you got to show it. And if your executive leadership aren't doing this or they're not showing it, this is something that they can really be proactive if you want to get a handle on fraud within the organization. Here are some ways and techniques that you can consistently remind employees and stakeholders of organizational values and principles. I've learned and I've experienced that when you have a message from the president, it's such a powerful tool to combat fraud. When you have the senior level, you know, president talking about the topic, you know, drawing the hard line in the sand of what conduct's not acceptable, and really getting people on board, and not being afraid necessarily to report wrongdoing when in fact they may see it. So affirming values, key safeguard. When we talk about as our second safeguard, updating policies and programs. Employee support programs, open door policy, anti-retaliation policies, key policy and programs that really can play a proactive role in combating fraud. when we talk about employee support programs, we learn that addiction can sometimes be cause for fraud. And the reality is, if there are employees that are struggling with certain personal issues, hopefully the organization has some programs that can help them before it gets to a point where they're actually considering taking on or perpetrating a fraud against the organization. Same thing with family or financial problems. Are there helplines? Are there support programs in place? Mental, emotional health. In the absence of these, and this is really a proactive measure when it comes to combating fraud and deterring it in the organization, is by providing employees a channel, again, before it gets to the point where they're thinking about committing frauds. It's very positive thing to have in the organization. And when you talk of fraudsters, more times than not you hear is, I never thought it was going to get to that point, or I was only intending to borrow the money, I was going to pay it back. So, sometimes there really are sad stories behind frauds that are perpetrated. So I think the challenging question is, how can we implement programs internally that can really help safeguard against fraud? The open door policy. So the reality is, the key question is, do your employees, can they really freely speak about these topics? Can they freely talk about pressures they're getting from management or their superiors without getting retaliated against, without getting, management shunning them? Is there that open door policy and the complementary anti-retaliation policy? Can employees find that protection that they need in the event that they have something to report? Again, whether you're designing, you're implementing, or assessing, key things that you want to look for with respect to safeguarding against fraud. Segregation of duties. This is such a key one in the grand scheme of fraud. A lot of frauds can be completely prevented. You're never going to, I think, eliminate all fraud in the organization, but you can prevent fraud very effectively by having the right segregation of duties in place. And as a general rule of thumb, you don't want any single employee or group of employees to be in the position to perpetrate and conceal errors or fraud. That's the general rule. So what do you want separated? What incompatible duties you typically want segregated? Well, here's an outline of them. The custodian of assets, the person with authorization, the person with record-keeping authority, and the person conducting reconciliations. If you separate those key duties, it's going to be much more difficult for an individual to commit fraud without forming a broader conspiracy and collusion type of scenario within the organization. So I think important key principles here when you talk about wanting to separate those duties that conflict. Safeguard number 4, implement auditing. And what I wanted to do here is, again, really raise to light where is internal auditors and where does the auditing process really play a role in preventing, detecting, and deterring fraud. So I've highlighted some key standards here from the Institute of Internal Auditors International Professional Practices Framework. And it's, again, important for internal auditors to have sufficient knowledge to evaluate the risk of fraud. Again, we're not expected to have that expertise of someone who's primarily responsible for forensic investigation, but nonetheless, we have to have sufficient knowledge to evaluate risk. And the reality is, because we're on the front line, we need to be exercising this level of proficiency and do professional care in our work. Also, from the risk management perspective, the internal audit function itself should be evaluating these potentials for fraud and how the organization is managing fraud risk. That's a requirement. It makes a lot of sense, again, because we're on the front line. The other standard, when it comes to developing our engagement objectives, we should always be considering the probability of significant errors, fraud, and noncompliance in other exposures when developing the engagement objectives. We should be, again, considering fraud in all of our work, in addition to errors and non-compliance, as part of our engagement, our objective setting process for our engagements. Safeguard number 5, training employees. You know, I can't stress enough how important it is to raise that awareness, to train employees when it comes to the topic of fraud. There's such a big number out there. 5% of revenues on average are getting lost to fraud. There's a big reward. There's a big ROI on having effective anti-fraud controls. And the thing to consider when you talk about training is individual and business unit needs. They may need to be custom and tailored. Sometimes the one-size-fits-all program doesn't necessarily work in an environment where you might have one business unit in a factory floor versus executives in an accounting department. You really want to take into account individual and business unit needs when it comes to training. Designing certifications. One of the best practices that I've seen is employees will annually certify themselves to the organization's business code of conduct, asserting and certifying that they have not participated in or witnessed or are aware of any fraud, illegal or unethical behavior, and if they are, they're encouraged to report it. So I've seen the certification process be very effective in organizations actually using it not only as a reinforcement tool, but also using it as a lead source to solicit information regarding wrongdoing that's currently happening in the organization. And some key tips when it comes to implementing training. You really want to make sure that it reinforces what is right and wrong. This might be different for every organization, but nonetheless, every organization should have boundaries for what's right and what's wrong. It needs to be reinforced. They need to be real examples of, quote, ethical dilemmas as part of the training that's, again, applicable to the organization and the industry. And at the end of the day, should support your value system. You know, every organization typically has values and principles espoused in its code of ethics. The bottom line is, does it, you know, do you mean what you say, and does your training support that value system? I'm not here to tell you if your value system is right or wrong. I'm here to say, hey, you should have one, and if you do have one, how is your training supporting that value system? Something to really think about, because training can be such a powerful safeguard when you talk about fraud. I'm going to take a quick break here about polling question, our last polling question, number 4. Internal auditors must evaluate the potential for the occurrence of fraud and how the organization manages fraud risk. Is that true or is that false? I'm going to open the polling question now, and please feel free to answer the question. Got most of our answers flying in pretty quick. We're at 86%. We're at 100%, and everyone said true, and that is absolutely 100% right. That's true. Internal auditors have a key role here. This is a role that I think is certainly emerging. Internal auditors are becoming more aware of it, and they really are playing a much more proactive role when it comes to fraud in their organizations. The last 2 safeguards we wanted to cover, and I know we're at just about got just a couple minutes left. Safeguard 6 is outsource your reporting line. If you can't outsource it, you want to make sure it's going to a department that's independent enough to truly vet out and validate complaints that are coming in. It's great to have multiple channels in terms of telephone, email, web forms. Really make sure that your system has a good intake system to flush out and validate complaints. Make sure that you have the right level of anonymous or confidential reporting lines to make people comfortable with respect to reporting wrongdoing. Asking the question of, do you report any incident? So are you looking just for illegal activities, violations of law, or are you also looking for violations of your code of ethics? I'm a big proponent to say if you can detect unethical behavior before it transgresses into illegal behavior, you're going to be ahead of the curve. So really understanding how that reporting line is designed, and what type of incidents you're looking for. Actively marketing the line, very key to make employees aware. I personally like the term conscientious employee rather than whistleblower. I think whistleblower can sometimes have a negative connotation, like you're a tattletale or a rat. The more positive spin on that is I like to call the referee, right? They're really the whistleblowers, the people that keep the game fair, the people that call timeout and say, let's get the facts straight. Conscientious employees, again, how are you going to market the line is really the key question here. Different things work for different organizations. Whether or not you have rewards in place, do your rewards make sense? And at the end of the day, is there a feedback loop back to the reporter? My experience is if people know that they're putting in a complaint or an incident and it's going into a black hole and there's no feedback, they're going to be less inclined to report in the future. So key questions to ask about your outsourced reporting line. Again, great safeguard to detect and deter fraud. And lastly, safeguard 7, routinely surveying your employees. Fraud has such a foundational element in culture of an organization, and by routinely surveying employees with respect to the topics of ethics and governance, and really understanding what the corporate culture is like, I think is a really important way to not only increase awareness, but this can play a very important role in preventing and deterring bad behavior. I mentioned an example earlier where routinely a chief auditor was sending out not only survey reports, but asking about, have you witnessed any illegal or unethical behavior, and if you have, report it in our line. And statistically, he'd say about 1% of the surveys would come back with some type of incident getting reported. About 50% of those were valid. So his organization had 400 people. On average, every year he would do this, he would really end up with about 2 incidents getting reported that actually, after investigated, some type of wrongdoing was found. So it works. Case study tells us that it works. Survey, use those hotlines, all really good safeguards to combat fraud within the organization. I know we're at just about our time limit here, so what I'd like to do is turn things back to Jim. If anyone has any questions, please feel free to shoot them through the chat box. I'll be here for a couple extra minutes longer, and if anyone ever has an interest or need in on-site training, feel free to contact myself. Thanks again for participating in today's webinar, and Jim, I'll send things back to you.
Thanks, Mike. Well, I want to thank you for putting on this great presentation today and this great webinar, and thank everybody that joined us. I don't see where there's any questions, so I guess maybe you answered all of their questions or all the ones that they were thinking of. If you do have any other questions that come to mind after the fact, you can either email myself or Mike, and we'll try our best to answer them. And I just wanted to thank you all for joining us today, and thank Mike for putting on a great presentation on the business of fraud and occupational abuse. We do have an offer that we are making available, that if you want to get all of your staff involved and everybody earn CPE, we're offering special pricing for these, and this is a great opportunity to earn CPE early in the year, so you aren't scrambling at the end of the year for filling in the gaps. So consider this for your office. Share it with your friends and peers and others in your network. And in closing, I'd just like to say that the purpose of our Training Without Travel webinars is to provide you with high-quality, low-cost online alternative training solutions covering timely topics with value-added resources and tools that you can use in your job. We bring the world's best subject matter experts directly to your desktop with timely information. The next webinar in this series is Converging Ethics, Governance, and Culture, which will be next Thursday, I believe. Is that correct, Mike?
That's correct, Jamie.
Next Thursday. Okay, and that's a great topic, and Mike does a great job of covering those things. So, if you're looking for ethics training, if you have CPAs in your office that are looking for ethics training, this is spot on. So, with that, I'd like to close and thank you, Mike, for putting this on today, and thank you all for joining us. And I wish everybody a great day.
Great. Thanks, Jim. Take care, everyone.
Bye.